Cryptocurrency is stupid, fake money, risky, speculative assets in a bubble, and I'm buying it. And here's why. Welcome to the channel. I'm Joshua. This is Milk Money, where we learn to build a money pile so you can then milk that money for income and wealth generation. Now, first off, I must always remind you that this is not financial advice. You must always assume that everybody on YouTube is an idiot, including myself, especially myself, and that if you listen to me, you could lose all your money. So if you make investment decisions simply because you heard me say it, then you might lose all your money. So make sure you always do what good old Ronnie Reagan said: distrust and verify. I think he actually said trust and verify, but it's YouTube, so don't even do that. Don't even trust. Always verify. Use YouTubers for ideas. You always have to do your own due diligence and research and make decisions based on your own risk tolerance and financial situation. Now that that's out of the way, let's get into the 5 reasons why I think cryptocurrency is a must-have in every portfolio. Normally, most of my portfolio, I really want it to be in safe income-generating investments with long-term time horizons, good risk-reward ratios. Maybe I'll spice it up with some options to leverage a little bit of extra return and also generate income. But I've also realized recently that cryptocurrency is an essential part of a safe investment portfolio, and we're going to get into why. One of the crazy things about 2020 is that 25% of all US dollars were created in 2020. The money printing was insane. Jay Powell made the money printer go brrr, right? Tons of money being printed, and now with Biden and the Democrats in control, everybody assumes that they're going to be doing nothing but pumping more money into the economy. They've even said it, so we should definitely expect lots of fiat money entering that money supply. Now, how should that affect our investing decisions? Well, if the government is pumping trillions and trillions of dollars into the economy, then based on what I learned in Econ 101, that should cause the dollars that already exist to go down in value. Now, again, I'm an idiot on YouTube. I'm not an economist. There's a lot of factors involved. Maybe the government's going to get away with money printing and we're going to get no inflation whatsoever. There's a lot of factors with employment numbers, supply, demand, asset price. All these things could kind of come together to decide how our inflation is going to work. But at the same time, if we are doubling our money supply and then we have a snapback in demand through a post-COVID recovery, I feel like there's a really strong chance that we have a huge inflationary phase. And that scares me because I'm working really hard to become a middle-class millionaire, and I would hate that when I'm finally getting there, that they're going to rip the plug out from under us and then cut our wealth in half. Everybody needs to be hedged with some type of inflationary asset. The normal recommendation has always been gold, but interestingly enough, gold has been falling and going stagnant lately when you think everybody be loading up, and part of that is because everybody's loading up on Bitcoin instead. Bitcoin would make an absolutely fantastic hedge against inflation as long as Bitcoin sticks around, which the current thesis is showing that Bitcoin is the future. So first off, you need to have some cryptocurrency as a hedge against inflation. However, there's a second benefit to having cryptocurrency. So if you think of something like gold as being a hedge against inflation, great, you have gold. The only reason that you have it is as a hedge against inflation. Gold is not going to revolutionize the world. Gold is not going to be gobbled up by every foreign economy on earth. Well, I guess gold could be if things really got bad. But you're going to buy gold only because you expect inflation to happen and you need a hedge. Bitcoin, you could do it for the same reason. However, Bitcoin has many other advantages that could also cause it to be a high asymmetrical risk asset as well. And what I mean by that is that it's a very risky asset. You could lose everything with Bitcoin, okay? There is risk, but the risk is asymmetrical in that you can lose X capital that you put in, but you can make 10X capital. So I really feel like Bitcoin, it's all or nothing. You're either going to lose everything because it doesn't come true, the thesis that is going to be the reserve currency of the world going forward, and that the blockchain is going to be the internet of the future. If that doesn't come true, then all coins are going to become worthless, and so you're going to lose everything. However, if those theses do come true, then the value has to go up, and I'm going to talk about some of the reasons why in this video. So essentially, not only am I going to be putting a percentage of my portfolio as my hedge percentage of my portfolio, but also my risk portfolio. I think everybody should have a small percentage of their portfolio that's for more riskier assets that have the ability to go up, partly to make you feel better about having the rest of your portfolio safe, because at least you're playing with those big names, you're playing with Tesla or whatever rocket ship you think you found for the year. But because of the asymmetrical risk reward potential of cryptocurrency, I'm taking my risk capital and putting it 100% into crypto. Not my whole portfolio, just my risk capital plus my hedge capital. That's going to be what I use to invest in cryptocurrency. I believe it's a good investment. Now, it is a speculative investment for sure, but all investing technically is a speculative investment unless you're value investing where you know something's worth 10 and you're getting it on sale for 5. So the first reason that cryptocurrency is I believe is a good investment going forward is for insurance capital. So that Bitcoin is going to be insurance against economic issues that could arise particularly with the money supply. Chamath Palihapitiya, I don't know if I said his last name right, but good old Chamath is a huge Bitcoin bull, says that everybody should have a small percentage of portfolio, whether it was 3 to 5% in Bitcoin, as what he likes to call schmuck insurance. And it's basically that the schmucks running the government screw everything up, destroy our money supply, destroy our currency. What are you going to do? You need some type of reserve, and that's where you buy Bitcoin, just in case everything implodes, and then hope that Bitcoin is worth something in the end, because other countries are buying up Bitcoin. Other people are supporting the price of Bitcoin as governments around the world and citizens around the world load up on it. As long as there are some people believing that it is a store of value, it will be a store of value. Also, geopolitical risk. Who knows what could happen that could destroy our economy or our money supply, whether it's war with China, who knows. At any day, there could be a major black swan event that's going to make you wish you had some type of outside currency. And you can have gold, you can hold euro, but Bitcoin could be a very good alternative to protecting your portfolio as insurance. The second reason why cryptocurrency is a good investment is that the blockchain is going to be a revolution in technology. And therefore, you're not just speculating on a value store hedging asset, you're actually investing in the future of technology. And so when I first started researching crypto, I was only interested in hedges. I was only interested in as a cool new alternative to gold. Let me look into it. And then once I looked into it, I was like, holy crap. I always thought cryptocurrency was just a bunch of digital fake money that the only reason there was hundreds of coins was because everybody was trying to invent their own fake money, and who knew what fake money was going to win, and they were all going to be worthless, because why would everybody keep up with hundreds and hundreds of coins? They're going to pick one, and that's going to be something, or it's not. However, as I started digging in, I started realizing all these individual coins were based on different blockchains and blockchain applications, and that if those blockchain technologies that coin was tied to became useful and adopted, then that coin is going to become valuable. So actually, when you're buying coins, it's almost like buying a stock in the internet back when the internet was coming out, but instead of buying an individual internet company, you're buying into the internet itself. And so when you buy a coin, making a bet that that specific chain will be adopted and used in our society going forward. So what are some ways that this blockchain is actually going to be revolutionary? The main advantage of blockchain currently as a technology is the decentralization aspect. So almost imagine the blockchain as a new type of internet, right? So currently, if I would like to access a website, I would tell my computer to go to that website, and that website would pull up information from a centralized server at Amazon Web Services, and that data would be sent to me, and then anybody on the internet that wanted to access that same data would need to access that same individual centralized server. How the blockchain works is every computer that is spread out all across the world that is connected to that blockchain will be storing and sharing that information decentrally, so all over the place. Everyone has a register, everyone has access to the exact same information. It is not stored in any one individual place, which makes it much more durable and secure. In theory, even though Amazon has several backups of servers, all of Amazon could be taken over by the government, and they could shut down all their servers, and now nobody could access that critical information. And so when it's decentralized, you'd have to shut down the entire network, every single computer, every single user, every single access point to that blockchain to wipe out the blockchain. So this decentralization is also creating efficiency in finance. So I think the first killer app, the first main reason why cryptocurrency is the future is DeFi, and that's decentralized finance. So currently, if I want to send money to a friend, I've got to send it to my bank. The bank validates that it's my money, connects with his bank to validate it's him, and then it will transfer to him. And there's like several steps of the process because we have a middleman who has to make sure we both are who we say we are, and we're sending it to the right place, and they're going to take their cut out of the middle, and it's going to take a few days. With the blockchain do all that validation for you instantly, and I can send $1 billion to my friend in Australia in a matter of seconds, and the blockchain would make sure everything's on the up and up and good to go. And so large banks, that investment banks and hedge funds and things like that, have to send large amounts of money all over the world all the time. And so they're already getting ready to make the move to using decentralized finance on the blockchain. And billions of dollars of transactions have already been processed through the blockchain. JP Morgan has already started taking action into putting their money management on the blockchain. They've even come up with their own coin, JP Coin, and I believe it's all based on Ethereum technology. MassMutual's already also said that they're going to be investing in blockchain technology for transferring and validating transactions. So finance is going to be the first wave of blockchain technology where it's actually being used just like the internet was used for email and chat rooms in the very beginning. DeFi is the start, then who knows what's next. There's other cool technologies that are possible, like for instance, digital ownership of assets, or ownership of digital assets, which is something that is hard to do nowadays. If I were to download an artist's audiobook or ebook or something like that, I can simply just send it back up to a centralized database on the internet where everybody can download it, and my intellectual property would not be secure. However, with the blockchain, it can validate that only the people with the key that have the rights to that digital asset can access it. So in theory, an artist can say there's 20 limited avatars or something that they create, or an artist can say there's only 1,000 copies of this album that are digital, and if you purchase it, you get the key to access it, and that album will not be able to be distributed without that key. So essentially it puts a limit. So anyway, there are some technological advantages to the blockchain that will fuel a tech boom, so to speak, in the blockchain world, which will make all the coins that are being used become much more valuable. So not only is it a hedge, if these technologies get adopted, then your coin will become more valuable because people using the technology will need coins in order to run it. So essentially, the coins aren't just fake money. They're actually used as currency to reward the computers and the people spending the money on their electricity to run the blockchain. So you get a coin in return every time you validate a transaction, or a partial coin, or whatever, depending on each blockchain and currency. If a giant bank, like an insurance company or something, was a heavy user of that blockchain, they would be interested in accumulating coins in order to run their services through that blockchain, and therefore would make the coins more valuable. So the value of the coin is going to be related to how much that technology is being used and the scarcity of that coin. So if you pick the right coins, which blockchain and Ethereum are currently the winners, safe bets, but there's also even smaller coins that might have technology adaptations for the future, and if you were to buy coins, you would be investing in that technology. So where I first thought of coins, I thought it was just a bunch of fake money, but they're actually tools that help run the blockchain that they were made for. All right, the next reason is scarcity. So it's funny because when something's a digital asset, you don't expect it to be scarce. A la Napster, Google Images, as we've seen with the way we use the internet today, once something is put on the internet, it can be copied 1 trillion times, shared throughout the world, and it loses its scarcity and its value. It's basically destroyed the old versions of the music industry and many of the arts because the work is infinitely reproducible. Bitcoin was designed in such a way to guarantee that there would only be a certain amount of coins produced, therefore ensuring its scarcity, and that scarcity increases value as long as there's demand. You have 14 million coins available, and if 0 people want them, then they're worth 0. However, if there are people fighting over 14 million coins, the value of that coin has nowhere to go but up. And now that it's actually being treated as a store of value by certain governments and certain hedge funds and certain individuals that have lots of money, the odds of that demand outpacing the supply is getting higher and higher by the day. Every time a millionaire decides to hedge their net worth into it as a long-term hold on insurance, that coin is locked away. Every time somebody loses their Bitcoin, that coin is locked away. And just JP Morgan predicted that if all of the major funds allocated 1% of their portfolio to buying Bitcoin as a hedge, that would create a demand of $600 billion of Bitcoin purchases. And so as you can see, a lot of people chasing a small amount of coins is going to cause that price to skyrocket. Most of the other cryptocurrencies have similar scarcity elements as well. Some coins like Dogecoin is almost unlimited in production, so it's never going to have the scarcity required to make it valuable. However, some of the blue chip coins like Ethereum have scarcity built in and actually even have deflationary measures so that as the coins are becoming utilized, that they actually get some of the coins burned off so that the value of those coins is always supported. And lastly, pumpamentals. All right, so this is where the speculative part comes in your favor. Yes, cryptocurrency is a speculative asset. I do believe it's a little bit more of a founded investment than I used to before I started researching, because when I first started hearing about it, I literally thought it was just a greater fool investment. You're buying something only because you think the price is going to go up. And while that's still an element of what you're investing in, if this technology is adapted, then that momentum will only grow. But there is a lot of potential for hype, pumping, and frenzy and bubbleliciousness to move into the crypto space, as it's already started to move into the space. And when these coins start rolling, they rocket. So also, of course, increases the risk. So if you're buying it after it's been rocketing a lot, the odds that it rockets back down on you get much higher. But at the same time, if you can get in at a good price, maybe after a major correction or a crash or a bubble popping, especially if this crypto bubble pops, I'm backing the truck up because I believe in the future of cryptocurrency for sure. So if you get in at the right price and then the wave of pumpamentals, momentum, and hype come in behind you, you've got a chance to make some major gains, and you could take some profits out and then keep a portion to be as your long-term hedge. And lastly, one more bonus tip: some of these coins are actually creating income-producing opportunities. Interesting enough, because the coins are actually used by the blockchain, they need people to volunteer their coins to be circulated and used as validation tokens throughout the blockchain. So if you're willing to buy some coins and then stake them to the blockchain and allow them to be rented out for the blockchain to function, you will get a return. Polkadot, for instance, can give you up to a 12% return annualized for just staking your coins. Some coins are closer to 5%, but essentially you could buy some Ethereum, If you want it as a long-term hold anyway, buy a couple of coins and then you stake it and get your 5% annualized return while you're holding it for 10 years. It's actually an income generating asset, surprisingly enough. So anyway, there's 5.5 reasons why I'm investing in cryptocurrency and why you should consider it. Of course, don't take my advice, do your own research, see if it fits in your risk or hedge portfolios. It kind of fits in either one. You can choose or combine the two like I am. Because I'm so bullish long term, I decided to take a big chunk of my risk portfolio in there. Short term though, it is scary because it has run recently and I don't like to chase things. However, if the levels that they're at hold and they decide to take another upturn, I do believe that we have at least one run in us. Could be wrong. I'm willing to take the chance because even if I lose money short term, I do believe in the cryptocurrency space long term, both as a hedge and as an investment in the future of blockchain technology. Anyway, thanks so much for watching. Please like and subscribe. It'll get you good karma in the cryptocurrency. Gods will bless you with great prices and great returns. And that'll also help make sure you see all of my videos on crypto and traditional investing as well. Hopefully we can keep making money the milk money way, which is learning how to make more money so we can save more money so we can milk that money to make more money. Yep, that's the milk money way. Anyway, I'm Joshua. Thanks so much for watching. We'll see you in the next video.